Here's another example now of a trade where you can see on this weekly chart the price has been running down for quite a long time in that falling channel, sort of falling line of resistance above it. It's hit that line many times along the way and couldn't get through until now. And the bottom is the same, as got a support line falling through here. So it's a falling channel it's been trading in all the way down for quite a long time. This is a weekly chart, and the top up there, that goes back to April 2009. So here we are down here now. This is not today. The top has been wound back on this particular chart, so we can take you forward and show you what happened. And this is actually October 2010. So it's a whole year there that's been running down in that channel. And in the process, it gave us these high points that we can join up with this top resistance line, and the low ones here we can join up in that low falling support line through there. So what we're looking for, of course, is a breakout of that channel on the top side to buy the stock and hopefully make some profits. And that's a very positive looking chart. And people don't like stocks that have fallen, but we do, because when they've fallen, the risk is lower when the price is low. The risk of a fall is highest at the top. The risk of a fall is much lower at the bottom. So we like stocks that have run down like this and eventually bottom out and reverse, because that's when the risk is much lower. And we don't take risks anyway, of course. All we're doing is loading our dice, so to speak, or lining up our ducks in our favour. That's all we're doing, is making it a higher chance of a good profit. So this little bar here tells us that we should look more closely now, looking for a way to buy that stock. Let's look at our day chart, and you can see there it is there. And this little pattern in here, by the way, warns us that there's a sudden move underway. You can see a similar pattern in here, and the sudden move up to this resistance line. We couldn't buy in there because the resistance line was too close above it. This time, it's a fair way up. And that pattern there tells us to expect a strong move. So that's the beginning of it there. So we can actually take this trade, next morning. So we would buy in there, basically. Now the actual buy price for that would be 265 on the 6th of October 2010. We'd need a stop loss, of course, and so I'll put a stop loss in place. Just have a look to see where it should be. And actually down there at those lows would be the ideal place. So I'll put that in, about 9 or 10% down from our entry. Those lows that you see through there, a little bit of support just in there, that's our stop loss. Should the price come back and go through that red line, we'll have to stop and get out and have a small loss, which is not really a loss, as I've said before on previous videos. That's simply a cost of doing business. Do not see stop losses as a loss. It's a poor terminology that we use in our industry for what is really not a loss at all. It's just a cost of doing business when it occurs, which is only occasionally. We get maybe 7 out of 10 successful trades and 3 that go the wrong way. And if those 7 out of 10 are all substantially profitable, which they usually are, then those small stop losses are just a joke and they're meaningless. And so to dwell on those is quite silly. Okay, there's our stop loss right there in case things go wrong. We're in the stock and it's already come up. We're looking pretty good. So what happens next? Well, it runs up, as you can see, quite strongly there, and that's okay. No problem with that at all. We're happy with what's going on here. Now, as you can see there, it's come up and hit that resistance there. Those orange dots are actually resistance. That's a resistance line. That's why we keep them there, so we know where the resistance is. And you can see how it's come back down and closed right back down here on the bar. So it did run up during the day, and it's already come back. It actually stopped right on the resistance line, and it's come back. That's fine. Not a problem. Just leave it alone for now. Just day by day, we just check this each evening after work. It only takes a few seconds to check. Now here it is back at the resistance again now, and we hope it'll break through, of course. And so it does. As you can see there, it's through now. Not by a large margin, but it is through at least, so the trend up is continuing. Now remember that weekly chart pattern that we started with, this big channel, that is a strong pattern, and so we should expect a substantial rise out of that now. So it took a whole year to run down like that, so we can reasonably expect it to do something decent on the way up. We don't trust it, of course. We won't stake our future on it, but that's what we can expect. So it's running up there nice, and now it's through those orange dots, which means that they now form support. The resistance over here becomes the support once the price is through. So there it is now bouncing off the support there of that line, as you can see just in there. The close is back up here, so it's come down and bounced nicely that day, which is good. That's a very positive sign. And it's come back and tested it again, so it's not really sure of itself yet, although the closes each time are quite high, as you can see. Back to test it as support again. Now the close is lower. Now it's a bit of a worry. And it's gone through. Now not only has it gone through the support of the orange dots here, it's also gone through the support of the green line. That's also a support line, as is the mauve dots down here now. So it's gone through two levels of support here, and we should become concerned at this point in time and maybe look for an exit. One of the techniques that we use is we use that purple line on the weekly chart here, and it's got a close below that, and that's a sell signal. And it hasn't quite done that yet. The close is right on the purple line there. It's not through it yet. And so it's not actually a sell signal yet. It could easily reverse from here. That could be just noise there on the green line. You can see how thick the noise band is down here. So it's just noise on there. So it could easily reverse quite strongly. So we still should be a bit patient and just wait a bit longer. And there's a strong blue bar, and it's closed a bit higher. It's a lower bar actually, but it's actually closed higher there. So it doesn't tell us too much. Now it's back up here, opened up here, but came back and closed below the orange dots but above the green line. So it's working its way sideways here, doing battle with this whole scene. It doesn't quite know what to do yet. Now it's back underneath again. So it's threatening to go down, obviously. We need to be very careful now. And that's a much worse signal there. Now it's a much bigger bar, open at the top and close down here. That's probably a fair enough sell signal. In fact, if we go back to our weekly chart, it's still not closed below that purple line, not really, it's just on the edge of it. So we're saying just hold on one more day, and there it is, it's a blue bar. It opened here and closed back up there. So it's a lower bar, it's trending down, but it is a blue bar. So again, the signal on our weekly chart isn't there. It hasn't occurred yet. So we're just waiting for that actual signal, and it hasn't occurred yet. And there's a much lower close now on that particular day. So back to our weekly chart, and yet there's the close below the purple line. That's the sell signal. It is saying sell now tomorrow morning. And so we sell next morning in there on that day at the opening price there, typically at $3.10, and we're out. Now we bought in here at $2.65, and we sold up there at $3.10. We've made, what's that? That's 16.8, say 16% profit, about 15% if you take brokerage into account or something like that. And it's over a short space of time. It's over a bit over a month, and we've made 16%. That's better than the bank pays. Come on. So that's not a bad little trade. It's not a good one, but the thing is saying sell. It said buy me here. It said sell me there, and that is exactly what we do. We just simply used our tools to tell us when to do that. We've used our normal technical analysis methods, the channel down, the buy point in here, the sell point in here. It's all crystal clear when you learn how to read what this is telling us. And that's all you need to learn how to do, is to understand these techniques, understand these tools and what they're telling us, and have the personal discipline then to be guided by them. If it went wrong at the start here, you would sell here, and you'd cop a little loss. And it's just a business expense, as I said before, and it happens. We didn't buy in here because the risk of hitting resistance there was too high. It was a big resistance line there, plus this one. It was just too risky to buy in there. Here it's clear. Now it's not so risky, so now we can buy the stock. We still don't trust it, but our stop loss just there. As it was, it didn't come back to the stop loss, and we were fine. So that was a wise move. We obviously could have bought in here in hindsight, but we don't know that at the time, and we won't take those sorts of risks. We just won't do it. We want everything to be right before we venture into a stock. And then if we can't find a stock to trade, then we won't trade. We'll go to the beach. We'll go to the pub. We'll go watch TV or something. But we will not force this. We don't have to trade. We don't have to be in the market. We can be choosy. In fact, it's very wise to be picking and choosy and only choose good value. That was a good value entry there. Now it's saying, listen, the risk is back and you should leave. And so we will not take risk. When the risk is back, we're gone. And it's as simple as that. Now what's occurred since then? Have a quick look and see. And you can see it's continued to just work its way across there. Done nothing very much at all. And there's no reason why you want to own that stock. There's no buy signals or anything like that in there at all. And there it is today, sitting right there. So it's just done nothing since, and we're out. In fact, it's a bit lower. So there you go. That's another example. Catch you later. Bye. Hi, I'm Trevor Hurst. I hope you enjoyed the video. And if you'd like to learn more about this and perhaps learn how to do it for yourself, the next step is to click on the link below.